Every company, look, every family on earth should adopt the Bitcoin standard, right? What is that, 1 billion families?
Yeah.
Every person on earth should adopt the Bitcoin standard. That's 8 billion people. Every company on earth should adopt the Bitcoin standard. That's 400 million companies. I think that if you're actually an individual and you're using Bitcoin right now, you're one of the early pioneers. If you keep it, you'll be insanely rich. Most of the crypto OGs that have been in the business for 15 years are staring right at the thing and ignoring it or rejecting it as it's happening. If I were to say every public company should recapitalize on Bitcoin, that would be a start, but that would be an understatement, because I didn't include the 400 million private companies, did I? And I didn't include every institutional holder of any capital. That's a very powerful dynamic, and once that starts, that burns 100 million a week per company, a billion, that can burn billions, and that could be billions of dollars a week.
Michael Saylor argues that we're not just witnessing a shift in investment strategy, we're experiencing the death of legacy finance and the birth of a new monetary era. According to Saylor, Bitcoin isn't simply a superior asset. It exposes the deep flaws of every other financial instrument, from fiat currencies to equities and bonds. For him, Bitcoin is digital capital, not digital currency, and this distinction changes everything. As the world struggles with inflation and failing monetary systems, Bitcoin's scarcity, immutability, and cryptographic foundation make it the first scientifically engineered solution to money. While most institutions, public, private, and sovereign, are still ignoring this shift, Saylor believes the early adopters, including individuals, have an asymmetric opportunity. Bitcoin isn't just good money. It reveals the structural failure of everything else we once trusted.
Subscribe to Daily Bitcoin Trends for expert insights, real-time market updates, and proven crypto strategies. No hype, just smart analysis to help you make better decisions in crypto.
Every company, look, every family on earth should adopt the Bitcoin standard, right? What is that, 1 billion families?
Yeah.
Every person on earth should adopt the Bitcoin standard. That's 8 billion people. Every company on earth should adopt the Bitcoin standard. That's 400 million companies. Bitcoin is capital. It's digital capital. It's not digital currency. I think a stable coin, the dollar, is digital currency, like Tether. And you've got weak currencies and strong currencies. And a weak currency is the Bolivar, or the Naira, like something which is inflating at 14% a year or 30% a year. I think got strong currencies that are inflating at 7% a year. And then you've got capital, which is not inflating at all. Bitcoin is capital. It's not a strong currency, it's not a weak currency. It's a capital asset. If you take money off the top or you sell it, then you'll remember that you used to have billions of dollars of Bitcoin, but you sold it for Ferrari, and that will be unfortunate. But and so I think that there'll be some OGs that will still be heavily engaged. But I think ultimately, the base network is going to have 10 to 100,000 big financial institutions that are going to be settling large amounts. I think Bitcoin is the basis of all identity and authentication. It's another interesting technical idea. Presumably, public-private key cryptography on a Bitcoin network, it ought to replace most of the forms of authentication and identity and verification in the world. So I think that those are two technical dynamics that are operating, but on the other hand, if you launch 100 companies with those two ideas, 99 out of 100 are going to struggle, and one will achieve something maybe. Whereas I can take a dying hotel or a dying restaurant chain and I can make it worth $1 billion just using Bitcoin as digital capital. And on the margin, it's more likely to work than not. And so I think that the really big compelling ideas are the monetary ideas, or the financialization of Bitcoin, the securitization of the network.
Saylor dismantles the illusion of healthy credit and equity markets. From real estate to government bonds, traditional stores of value are collapsing under the weight of inflation and economic mismanagement. Bitcoin, as a pure monetary asset, reframes the way we evaluate all other assets. exposing real estate as illiquid, equities as inflation corrupted, and fiat as engineered obsolescence. For companies and individuals alike, adopting a Bitcoin standard isn't a strategy. It's survival. He urges the world's 400 million companies and 8 billion individuals to see Bitcoin not as an investment, but as a lifeline. Ethereum, Solana, and stablecoins like Tether serve different purposes, but they remain in the realm of currency. Bitcoin transcends that, it's engineered capital, and without it, Saylor argues, markets cannot be fixed. Even if 99% of Bitcoin startups fail, the network's core utility will revolutionize capital formation, identity, and authentication in the 21st century.
If you want to riff on that a bit, it's like you learn Bitcoin, and then what's your conclusion? The big overarching conclusion is not how good Bitcoin is, it's just how defective the fiat currencies are that we used to rely on before Bitcoin. So because Bitcoin is a pure monetary asset, it causes you to realize how inadequate all the previous monetary assets were in the previous 10,000 years. And because it's a pure monetary asset, you realize how inadequate the existing equities are. And then you realize how inadequate the existing credit is. So, if you accepted the world and said, well, the bond market is healthy, the equity markets are healthy, the money markets are healthy, that was before Bitcoin. And then after Bitcoin, a lot of people realize, okay, well, if Bitcoin is good money, then I guess the other monies are defective. But not many go beyond that to point out that the implication is all of the existing equity markets are impaired. And all of the existing credit markets are impaired. So a lot of people rail about the evils of fiat currency, but the truth of the matter is, there's a lot of evils with all the other credit and equity instruments or all the other stores of value. Like people that thought they were going to save their hard-earned wealth by buying an apartment and Airbnb-ing it, or I invested in real estate, or I decided to buy a house instead, and then they realized that the house was a weight around their neck. After you've embraced Bitcoin, if you think hard and deep enough about it, you begin to realize that there are scientific reasons why markets don't work the way you want them to work, and why political systems are dysfunctional. And then once you embrace the scientific reasons why, then you start to engineer a solution, right? And in my case, I realized that you could use Bitcoin to engineer better credit, and engineer better equity, and engineer better capital markets, right? And without Bitcoin, you can't. And the other people, they don't know they have a problem because they've never seen a perfect solution. Right, so they're mired in an imperfect world.
Saylor paints a stark but empowering picture, a future in which Bitcoin becomes the settlement layer for global capital markets, hosting 10,000 to 100,000 financial institutions that trust no one but verify everything. With public-private key cryptography and identity protocols built atop the Bitcoin network, it becomes more than money. It becomes infrastructure. Saylor cautions, those who sell their Bitcoin today for a Ferrari will regret it when they realize what they gave up. Meanwhile, those who understand Bitcoin's role as digital capital, not just strong money, are positioned to transform industries, revitalize dying businesses, and reshape the global financial order. The world's monetary systems are broken, not just currencies, but the entire fabric of markets. The solution is already here. Those who recognize Bitcoin's role now will become the stewards of a more honest, secure, and decentralized financial world.